You're welcome to Accounting Simplified class. In today's lesson, we're going to be looking at control accounts. So, at the end of this class, the aim is for everyone watching this video to be able to solve problems on control account. So let's look at the objective of this lesson. 1, to define control account. 2, to state the purpose, the advantages of control account, to mention the division of control account, and to prepare the format of control account. All right, let's look at what control account is all about. A small scale business with less than 10 transactions per day grows over the years to the point of having 10,000 of transaction each day. If he were to open ledgers for each transaction, he might have hundreds of thousands accounts. What do you advise such a business? What is your advice for such a business to reduce the number of ledgers? Of course, in this kind of scenario, you see that the business is advised to look for every possible means to reduce the number of ledger, and one of the ways to reduce the number of ledger is the control account. So what then is control account? Control account is an account which contains the summary or total of entries in the individual account in each ledger. Is an account which contains the summary or the total of entries in individual accounts in each ledger. So basically we have three types of ledger: the purchase ledger, the sales ledger, and the nominal ledger. So the purchase and the sales ledger are what control accounts look into. So all our debtors and our creditors are being summarized. The total of them are being summarized and placed into this account instead of having numerous ledgers. All right, so it is important to mention that the control account and memorandum account, that is, the entries therein are not made on double entry principle. The actual double entry principle are made in the individual account. All right, so control account is a memorandum account. Now let's look at advantages of control account. Control account helps in locating errors. Another one, it helps to provide a check on accuracy of balances of the ledger, just like our trial balance will help to get the arithmetic accuracy. So also control account will get the the accuracy of the ledger, that is the individual ledger here. Then fraud will become difficult when we use this system of accounting. Fraud will be very difficult to commit. Error will not be easily committed. Then the balance of the total debtor and creditors can easily be calculated. They can be used to detect missing figures, and they save time. The control account, when we use it, it saves time. So also they allow homogeneous to be grouped together. That is, accounting that are similar, the accounts that are similar are grouped together. So these are the advantages of control account. Now let's look into the division of control account. Just like we have businesses that are basically into buying and selling, there are the major transactions we have in business, buying and selling. So also the major division of control account is the buying, which is the purchase control account, and the selling, which is the sales control account. So the sales ledger control account, or total debtors control account, like the name implies, is the account of all the debtors, credit debtors, credit customers that we have in the business, all their accounts are put together in one single account. All this ledger are put together in one single account, which is the total debtor control account. Then we have the total creditor control account or purchase ledger control account. The total creditor control account is the account for all our suppliers, those who supply us on credit. We have the record, but in one account. Instead of having Sule's account, Amina's account as our supplier, Deborah's account as our supplier, Taiwo's account as our suppliers, and all of that, we have all their accounts put together in one account called the purchases ledger control account. Now we've seen the division of this. Let's look into the next slide that will allow us to look at the nature of transaction in the business and grouping transactions according to this nature. That is the nature of in terms of buying and selling. So there are basically two forms of transaction in businesses: the selling and the buying. However, there are many other transactions associated with buying and selling. So, what are those transactions associated with buying and selling? The activity we're going to be doing here is to group these transactions on the basis of buying, that is the sales, and the buying, that is purchases, and the selling, that is the sales. All right. So, look at this clearly. We have two columns, two tables here. One is sales related transaction and purchases related transaction. All right. The essence of this activity is to get us familiar with some items that are found in the sales ledger control account and those items that are found in the purchases ledger control account. So once you can identify the items that are related to sales or transactions that are related to purchases, then it will be easy for us to know which items are for purchases ledger control account or sales ledger control account. Like the first one we have here, we have the credit sales. This is actually relating to what? To sales ledger control account. Credit sales will be here. All right. Then we have bills payable, dishonored. Bills payable is relating to suppliers, that is creditor, those we can pay our bills to. We can only pay to those who buy from them. So bill payable, dishonor is relating to this account. Then return outwards. When you return goods back to your supplier, that is, you must have purchased before you can return out. So return outward, which is this, is relating to purchases. Debit note issued. When you hear the word issued, is relating to sales ledger control account. That is debit note issued. This is found at the debit side of sales ledger control account. So it should be is relating to sales. Check paid to suppliers. The word suppliers indicates purchases, while the word customer indicates sales. So check paid to suppliers, which is this, should be entered here. Then dishonored check. Dishonored check. When check is being dishonored, this is relating to sales. They pay you by check, and you took the check to the bank and it was dishonored. So it should be relating to sales. Then credit note received. When you hear the word received, the received and issued makes it different for sales and purchases. So when you hear credit note issued or debit note issued, is relating to sales. But when it is credit note received, you can only receive from your supplier, or debit note received is relating to purchases. All right, so credit note received, this will be relating to what? to purchases. All right. Discount received also is relating to purchases. Debit note received, I've told you, when you receive, is relating to purchases. Then return inward, the sold goods out and they return them back to you, so it's relating to sales. Return inward is relating to sales. Credit purchase, of course, that is obvious. Credit purchase is relating to purchases. Then we have discount allowed. That is discount given to customers. Discount allowed, that is here, is coming to sales. Then credit note issued. So where do you think this should be issued? That is, it should be in the sales related transaction. And bad debt. Of course, you can only have bad debt when you must have sold goods to customers that are not willing to pay back. All right, for one reason or the other. Then we have bill receivable. You can only be expecting the bill when you have sold out. And then return inward, that has been treated. Then also cash received from customers. The word customer indicates sales. All right, that is how this activity goes. That we have been able to drag the items into the correct group. Items relating to sales have been brought to the group for sales, and items relating to purchases have been brought into the group relating to purchases. All right, now we can go ahead to look into all of this. Now let's look at the format. Basically, the format for control account is summarized here. Look at purchases ledger control account. Every item you found on the debit side of purchases ledger control account are a pointer to the reduction in what we owe our suppliers. Any items that is reducing what we owe to our suppliers then should be debited, and all the items that are pointing at the fact that we still owing our suppliers should be credited. All right, on the contrary, for sales ledger control account, all this is moved to the debit side of sales ledger. That is, what our customer hold us, what our customers are to pay us, will be debited in sales ledger control account, while any form of reduction in what they owe us will be credited. I believe that is taken. All right, let's look at the transaction, the nature of transaction here, and then now the format proper. We have the balance brought down, we have the credit sales, we have dishonor check at the debit side, we have interest charged to customers at the debit side of total credit total debtor control account. We have bill receivable dishonored, we have transfer of credit balance, and all of that. Now our concern here, the focus is the debit note issued and the credit note issued. You can see the word issue indicate total debtor or sales ledger control account. All right, now there is another thing very peculiar that I want us to know. The balance carried down, we can have balance carried down at the debit side and also at the credit side, and it's an indication that control account is a memorandum account. All right, control account is a memorandum account. So this balance carried down can be brought down to the debit side, and it indicates what we owe in the debtor. I mean, what the debtor are owing us, what is being owned by the debtors. Now, the one at the debit side, when it is being brought down, it indicates the excess money received from debtors. That means there should be a refund. In this case, there should be refund. So when there is refund is found at the debit side of control account of debtor control account. When there is a refund, it's found at the debit side of total debtor control account, because the excess is found at the credit side as a balance. All right, so let's take note of these closing balances. The closing balances, when they brought down at the debit side, it indicates the owing by the debtors, while the credit side indicates the excess money received from the debtors. All right, now the last thing for today's class is to look at the format for creditors control account. Now the same thing is important. Look at it here. We have the balance brought down, and we also have balance brought down. These balances, they are very important to us. Now for this balance brought down that we have here, indicate what? Excess of money paid to creditor, which is here, which is here, down here. Now excess money paid to creditors. So when we have a debit opening balance, that is what it indicates in total creditor control account. All right, but when we have a credit balance, it simply means the amount owed to the creditor, the total amount owed to our creditors or to our suppliers. Now take a look at where we have the refund now. If you have the excess here, then the refund is here. All right, then also take a look at the credit note received, and the debit note received. All right, these are the key things you should know. Other things are related to buying and selling. All right, thank you very much for this class. We will see the illustration in our next class and how to go about it.